Hey, welcome back to the channel. In today's video I'm going over a few reasons why I think Tesla is undervalued and currently underappreciated by the overall market. Tesla stock currently trades at $1,400 a share, and many analysts have downgraded their expectations and believe the stock is overdue a correction. I believe Tesla will hit $2,000 per share before the middle of next year as they continue to execute efficiently. Make sure to leave a like on today's video if you do enjoy, and let's go over a few reasons why Tesla is undervalued. Tesla stock fell almost 4% in Friday's trading session, leaving it with a P/E ratio of almost 730. The price to earnings ratio is the price of the company relative to the earnings of the company or net profit. Analysts have compared this to Volkswagen's 9 P/E ratio and assumed that Tesla is vastly overvalued. This is a dreadful error, as Tesla are not maximising short-term profitability and Volkswagen are. Tesla are growing the revenue at 30 to 35% per year and will continue to do so. Tesla also raised almost $800 million from selling bonds recently, which shows that Tesla do not have an issue with demand and will continue to supply that demand. They need to ramp production as quickly as possible as they are production constrained. Tesla delivered 10% more vehicles than they produced in Q2, highlighting underlying demand for the company's vehicles. Tesla raised almost $800 million in bonds against its auto leases. These are auto leases on their Model S, Model 3 and Model X's. These are people who have bought the car but are still paying repayments to pay for the entire vehicle. This allows Tesla to take advantage of future revenue now so they can work on more factories, especially for the Cybertruck. The Cybertruck is yet to be released, yet has approximately 650,000 pre-orders at an average price of $40,000. This equates to over $25 billion of unrealized revenue that will be realized once they build a Texas Terafactory and can begin to produce the Cybertruck at scale. In 2019, the majority of Tesla analysts were actually bears on the stock. They did not believe it was worth its price, but 2020 completely flipped that equation on its head. Their main criticism was that Tesla had a demand issue, which they've proven to be incorrect in 2020. Tesla's revenue dropped 5% year over year in the second quarter, compared to Toyota's 35% drop, Chevrolet's 34% drop, and Ford's almost 30% drop. This highlights fundamental demand for Tesla vehicles, and they also delivered 10% more than they produced. Although Tesla's deliveries fell 5% year over year in Q2, they were extremely resilient relative to the automobile sector average. They also managed to reduce new vehicle inventory by 32% in Q2. This has sent the stock climbing 5%, it now trades at $1,500 per share. Tesla set guidance at the start of the year that they want to deliver 500,000 vehicle units. I personally believe they will achieve this target, and that will send them on track to achieve a new all-time high. Some people are projecting that they will reach the $2,000 target by the end of this year, which is definitely possible if they can hit their target of 500,000 deliveries. Despite posting a profit in Q2 and also outperforming all other automobile companies on the planet, they're still heavily criticised by analysts. Tesla had a stellar Q2 in my opinion, as they're still on track to produce and deliver 500,000 vehicle units. Tesla have made a deal with Fiat Chrysler to sell them $1.2 billion credit emission credits. These are also known as ZEV credits, which are given by governments to incentivize electric vehicle production. Without these credits, analysts claim that Tesla would not have been profitable and not have been able to produce that $104 million profit, which was so important for Tesla to be included in the S&P 500. Tesla are not yet included in this index, but are hopefully going to be included in the prestigious index by the end of the year. Although Tesla have met all the requirements for S&P 500 eligibility, it is not guaranteed. The S&P 500 already has 505 constituents which have been accepted into the index. As Tesla's almost $300 billion market cap, they'll have to purchase 25 million Tesla shares at approximately $1,500 each. This will put a lot of upward pressure on Tesla stock if it is included. Tesla have reported 4 consecutive quarters of profitability, but they have not had an annual fiscal profitable year yet. Tesla's Battery Day is the most important event left on the 2020 calendar. It's set to take place on the 22nd of September, and Elon Musk believes it will blow your mind. I think Wall Street are underestimating Tesla's ability to innovate and make technological advancements. I think this will absolutely send Tesla flying towards the $2,000 price target as it sets a new all-time high. Hopefully you did enjoy today's video. If you did, make sure to hit that like button. If you're new to the channel, please subscribe and turn on notifications for more Tesla content. I'll see you guys very soon for another video on the channel.